Hello, welcome again to White Swan Finance. Sorry, it's been a while. Today we are talking about delta. There are three primary ways to analyze delta in trading. First, there's delta at price. Secondly, you can look at vertical delta, which is over the specific chart period, like every 5 minutes. And finally, there is the session delta, also known as the cumulative delta, which shows the overall buying or selling pressure across the entire session. Let's look first at delta at price, focusing specifically on the horizontal reading. This compares the bid and the ask data at each price level like this. Now, as you know, the market actually trades diagonally like this. Therefore, you can also use this reading in your trading. It may help you more with momentum shifts and a clearer reading of absorption. For this video though, we will stick to the horizontal reading. We are now looking at a footprint chart displaying only the delta. So how can this help us? Well, one way is to look for high delta nodes and then look for price to retest them. Now don't go blindly putting limit orders in at high delta nodes and just hoping that a trade will work in your favor. Look at the bigger picture. In this example, we see we have a large node with a reading of negative 149. Price continues up and breaks through VWAP. It begins to hold above VWAP and then price comes down, and on this occasion, to the tick actually tests our high delta node. Then, upon the close of this candle, provided it is above this node and confirming our direction, we can look for a trade. On this occasion, we actually have an additional little bonus in that it closed above the VWAP and put in another high delta node. Not a necessary factor for this trade, but it does provide an extra bit of confidence to our idea. We could now look to enter our long trade. We haven't rushed into a position, we haven't blindly entered, we have waited for evidence to confirm our trade idea. And where could we target? Well, another high delta node. In this case, this trade would have been roughly 25 ticks. Another example is as a reversal entry. You can see here we've been selling off, and then as we break what was the low of day, we print two large delta nodes. We trade below them, but ultimately break back above these nodes, and every price above this level is a positive delta reading. We then place our buy limits at the high delta nodes and our stop at the new low of day, giving us a small risk, but it has good potential to have trapped sellers at the low of day. We would therefore look to scalp or to hold all or some of this position back up to VWAP, for example. The key with this setup is using it at the right place. It won't work every time, but if you study this in particular, you will start to find times and levels where it is more probable, and also it is a very clear setup to look for. The second way to use delta is in our statistics at the bottom of the chart. This reading shows us the net buying and selling over the duration of each bar, also known as the vertical delta. So what is the best way we can use this? Well, one of my favorite ways is as a delta divergence. This is where we have a positive delta, but the bar has closed lower than its open, or when we have a negative delta, but the candle has closed higher than its open. Now, word of warning, don't go off and take every divergence you see. Study the market you are trading and form a fuller trade idea than just the divergence alone. But here is an example. Here we see divergence in delta. The delta has a reading of 309. We made a new daily high, and yet we closed back inside the day's range. So keeping it simple, we have a red candle, but the delta is green. Reading more, we can see that we have a somewhat bearish point of control, and it seems like we are trapping buyers at the high of day. Furthermore, we can see that we've already had a stacked imbalance that failed to gain any steam because price failed it on the next bar, and additionally, look at the total volume traded. It's almost 3 times the previous candle, and yet despite the increase in volume, any buyers that were pushing this were met with sellers. All of these add up to a good reversal idea. We could therefore trade it like this. Now, for transparency, this particular trade actually would have rolled over into the next day, especially if you were targeting lower. But the setup is still valid, and that's why I've included this example. Here is another example that took place this time at VWAP and at the start of the New York session. You can see we had sellers trying to push this below VWAP and being absorbed by passive buyers. We have a large negative delta, and yet we close green. A nice VWAP bounce entry looking for high of day as our target. Finally, we have the session or cumulative delta. I personally don't use this in my trading, but many people do, so it can be beneficial. The session delta basically starts at 0 each day or specified session. It then adds or subtracts each new bar's delta to give you a running total. So let's first understand that. Here is the start of a new day. The first candle's delta is 4, therefore our session delta is also 4. The next has a delta of 28. So our previous delta of 4 now plus 28 gives our new session delta of 32. So essentially, you can think of cumulative delta or session delta as a running total. More commonly, you will see traders displaying it in a much more visual way like this. This is the same information, but now shown in a bar and graph format. Now, this does have its place, and I understand why many traders like it this way. It's far more visual and it offers the chance to draw some pretty lines on your chart, but it's just not for me. Although, as you can see, it does offer some divergence ideas and can also show you absorption, so let's check out an example. You can see here, price is actually ranging, and yet the session delta is aggressively dropping. So what does this show us? Well, the current aggressive traders are selling short. However, given that price isn't moving in their direction, it indicates to us that there are buyers absorbing this selling pressure. There are several ways you can generate an idea from this. One could be a simple break and retest of the range. Another might be to enter a trade once we reclaim and trade above VWAP. It is a more aggressive approach, but this trade has potential to really take off in your direction. This pattern, if you like, is actually much more common than you might think, especially towards the middle of the day. Price breaks and holds just below the VWAP, prompting aggressive shorts to enter the market. They get absorbed and the price quickly and aggressively reverses on them and squeezes out the shorts. Here is another example. This time though, instead of seeing the delta dropping, we see the delta increasing. Once we reclaim VWAP, we could look to take a long trade, or we could take a long once we break above this high, or we could wait for a retest. It depends on your trading. There is no definitive right or wrong. Here is one final example, same as the first. We are holding just below VWAP. The delta is showing that aggressive sellers are in the market, and yet we reclaim VWAP and squeeze them out. So there are your 3 standard delta interpretations, along with some pointers to look out for. Be sure to let me know in the comments how you use delta in your trading. Like the video, subscribe, and I will see you next time. Bye for now.